Hi, Warriors. Good CPI day to everybody. How you doing, Michael? Bran. Yes, we'll be here for the number, Bran. James. Hi, Ryan. AJ. Ryan Varghese. How are you? Patrick.
Good morning, Coach.
Hey. All right. So how are you today, Blake?
I'm bright-eyed and bushy-tailed. How about you?
Okay, I'm Bushy Tails. So, good morning, Ryan. How are you? And Esther
Morning, mate.
Weremu. Welcome to F.A.C.E, Esther. Um, So
Morning.
Dixie may take that alternative route here if we get a benign number, down to here. What you thought might happen, Blake. I mean, it's all the number. I guess if it comes in hot, that won't happen. But to me, it almost looks like Cable wants to challenge us high up here. Take it out
Yeah.
maybe 29. So, uh, Dixie looks vulnerable for maybe another 60, 70 points, down to like 101.5 or so. And that would just be a retrace, and this is corrective, and that would be a dollar buying opportunity. And, you're going to get that chance to sell it over 110 once they take the stops out here. And maybe we go 10.5. I think that's something you were talking about, Blake, for a sell in euro. Long over.
110.10 and 110.40. Those are my levels there. So,
Okay.
yeah.
So may get it. The Iranians hijacked a U.S. oil tanker, and I noticed, Blake, we're probably threatening that line now in WTI. I don't have the trend line drawn out to here, but looks like it wants to come out of here for some kind of. There it is. Okay, back over this level. The moving average and the trend line looks like they're running together. So a little under 75, it'll come out of here, 4.5. Maybe we rally back to 80, 82. And S&P's was not a failing rally. We actually made new highs. The only
Yeah, futures
caveat
pushing
is,
up.
yeah, the only caveat is look at this compared to where it was when we made the last new high. We haven't done it yet in NASDAQ. That's 17,000. So I have to assume that if the dollar weakens, that NASDAQ will do it. But tough call. I can't get
Hey,
long.
Dale, have you seen have you seen the Nikkei?
Yeah, I
Ma
looked at it yesterday.
Massive break. It just continues. And I find it interesting. Yeah, and Ryan, you may have something to say about this. The last couple of days, the yen pairs have made a move. They didn't make a move overnight, as the Nikkei extended its gains. And I was short some New Zealand yen. I took a loss on it yesterday, because it was up against resistance. And then when the Nikkei broke out, it broke out too, and I just took it off. But I was thinking that we were going to get some more yen pair follow through. We didn't see it, surprisingly to me. But yeah, the Nikkei looks damn strong.
Yeah, I was
Yeah,
speaking about that this morning on the flow show. It's like when dollar yen follows yields. There's always a point at which the currency, the pair is going to run into its own fundamentals, its own levels. That's going to be just a step too far when following, something else when on a correlation. I think 146 was probably too much for dollar yen, irrespective of what the Nikkei did
Yeah.
um, last night, and may have even been a reason why the Nikkei, made that high and then just eased off from it towards the close. So
DAX
yeah,
hasn't been able to, but yeah, Nikkei. Um, you know, could you buy it up here though, Blake? I mean,
No, I mean it's I mean, I don't like to buy breakouts like that. I'll
yeah,
buy a pullback to the breakout point, but I don't like chasing it. If I wouldn't want to be short. I mean,
yeah.
that's one way you could look at it is like, if you ask me, would I be short? I'd be like, no.
Okay.
But I wouldn't
I,
want to be just chasing it up here. I just would be hell, I feel bad for all the people getting squeezed right now. So
Yeah, back under
you've got to look.
33.9, you could short it if it negates this thing.
Yeah.
I'm just noticing though, like on the daily, we're barely over 70. I wonder what the weekly looks like on this thing.
Yeah, you've got to look left about 30 years to get
yeah,
the
exactly. You got to go to
next.
1990, and then you're going to
Okay.
start finding some resistance levels in the 90s.
And the weekly, it's glaring.
Hey, do you
So
remember? I'm just off recollection. Didn't we peak in 88? Is it 80?
89.
89? Okay. All right. I wasn't
Yeah,
sure if it was 88 or
close.
89. So, I mean, we're just a hop, skip, and a jump away from making all those people whole that were buyers in the 90s back when neon was still cool.
Yeah. Watch this level in DAX, prior highs here. So, I mean, it's look like the Nikkei only on a not as dramatic, like a breakout, and we're not that far from negating this breakout here in the DAX. So, just something else I've noticed. So they all have to follow through. DAX is much closer to negating this breakout. If you look left, it was an important area. So that comes in right around 16.3, about 400 lower than where it
But
is
that's
right
the
now.
price action you want to see in the Nikkei.
Yeah,
Big break point, coming back, testing it, holding it. So,
yeah,
you wouldn't buy up the top, but you'd buy it perhaps into that support, that break area.
okay. Crypto people, I saw something unusual where after that news that we had on, the
The approval.
ETF, yeah,
Yeah.
the approval and then the fake approval, Ethereum really outperformed.
Yeah. Yeah.
Yeah, so,
Maybe because Ethereum is the next asset class to get a ETF, I would think.
oh, okay.
If
So
I had to guess,
is Dogecoin going to get an ETF too if Larry Fink from BlackRock wants one?
100%.
Okay. Yeah, they're all going to be ETFs. So okay. So Ryan, what are you thinking going into this neutral? Important levels for you, say in euro, going into this number.
Yeah, well, that 110 is going to be pretty important. Again, as I said on the flow show, we looked over the numbers, looked over the possibilities. I think you've got to be careful. We don't get a repeat of what happened last Friday, NFP and ISM, where the
Yeah,
market likes to flip around and
yeah,
then ends up right back where it started. So if you're looking to trade it, if you're going to be looking to short 110s in the 110s, great. Make sure it's not a game-changing number. But I wouldn't chase a break either side. I wouldn't chase a break higher long through 110 in euro dollar, just in case it, 10 minutes later it all fell apart and we end up back where we started. So I think where we close today is going to be important. If we close outside, with some broken ranges, then that gives you something to build on. But if not, unfortunately, we're going to remain back in the box.
Blake, on Canada, have you reassessed and think that maybe we're going to pull back to this level?
Nope, I love it. Well, I
Still
mean,
long.
we could, yeah. I
Yeah.
still love it long.
Okay.
I think that it is it's a situation where strong print, we're breaking out. Obviously,
Yeah.
if we have weaker CPI, yeah, I mean, it could pull back to the low 133s.
What's the market looking for on the number?
Well, as far as the CPI number,
Yeah.
market's looking for 3.2% year over year, month over month for core. The market's looking for 0.3%, CPI month over month 0.2%. So, I mean, those are the numbers that the market's looking for. I still think that it's going to be. I'm going to show you guys a picture of CPI and what I think here, which I think you're going to find
Okay.
interesting.
Okay.
So.
I'd like to see it yields. Important area here to see if there's going to be any continuation. I guess, we could pull back a little, but, this is pretty important area, this 4% level. So, go ahead and take over. That's really all I wanted to say. The miners will be up today. You know, gold, even though we're higher, you know, I still can't get real bullish. Maybe we could trade 20.5 or so in gold. I'm still looking for lower, and maybe silver does too. To
All right. Yeah.
break
Well, you know,
30.
gold. So gold's trading kind of heavy since you're talking about gold. This is the.
Oh, you have a bigger formation now.
Well, yeah. Well, well, that's your. I'll come back to that in a second. But
Okay.
this is the ascending trend line for gold, and I think you got to watch it. You can see it also intersects with the breakout point. This. Let me delete all this because you can. It is a little messy here. If you get rid of the fibs, right? Because you can see how we rejected the 618. So we know why. I mean that the euro, or excuse me, gold stopped when it stopped. You know, at the 2080 level. We all understand that the 2070 level is the big breakout point, the multi, year all-time high. Blah 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 blah. So we all know that. I don't need to keep that fib up there. But what you're going to see is this ascending trend line comes in right around 2010, 2015. The breakout point here is 2010 right there. So the 38% retracement is what's holding us up, which comes in at 2020. So my 2 cents as far as gold is, first of all, it's trading heavy, and even with the dollar weakness that we've seen come in the market over the last couple of days, gold has not responded to that, and that would make me nervous as a whole. So gold bulls need to watch this level, because if we start getting given back like 2010, that's going to confirm that the dollar is indeed going to respond positively to whatever data we got. So that's important to understand, in my opinion, because I think the dollar could respond well even on an inline print. If we get, for example, if we get, and Brian, I'm going to take I would like to get your input here in a second too. This is the dollar index, right? If we get an inline print, stocks rally, and they say, oh, look, disinflationary pressures still persist. The data is coming down as expected, right? As expected. We look at the data here. This is the CPI data, right? Whoops. Let me go up just a little bit. Okay, you can see the CPI data. We get the core CPI comes in at 3.8%. Month over month, the headline, or excuse me, the core number comes in at 0.3%. Core CPI year over year, is at 3.2%. Everything comes in as expected. Market goes, yay, we're getting the data's, continuing to slip. The pressures are, easing, blah, blah, blah. Dollar index may come under pressure, but I think that it gets bought up there. So what's going to confirm this move, that dip and rip in the dollar, would be gold. So I'll be looking at gold specifically, because if gold breaks here and we start seeing a sell-off below 2010, then I know that the dollar is ready to move. I am going to use the dollar gold correlation today. That is going to be the strong correlation that will, confirm what I want to do, which is indeed buy dollars. That's what I want to do today. Whether I get an opportunity to do that or not is to be seen. And one other thing I wanted to bring to your attention before we move along, and let me delete this stuff. I'm going to get rid of these lines because I don't want them on my chart anymore. Let me get rid of that one on the euro. Oh, that's all right. I'll come back to the euro here in a second. Take a look at Forex Factory. Now you can go inside of ForexAnalytix and find the same data. The issue is I can see it from here because it's in front of my face, and I can look at the history and the charts right here, but it comes up in a smaller pane. I want you guys to be able to see what I'm looking at. So this is the CPI data year over year, and you can go back, to the 2000,
when it really was,
right, when
transition.
CPI was benign. So you guys are traders. You guys are, all of you are expert chart technicians listening in. What? Yeah, I mean, if you're looking at this chart, what is this chart? Where is this chart at?
Support.
It says support,
Nice
right?
look.
Yeah, 3% on CPI is support. Now, if I was a betting man and this is the euro dollar,
You
what
are.
would you be doing right now? You'd be probably going long, right? You'd be like, oh, I
That's
got
one of
good
the
risk.
key takeaways from Lakshman's interview yesterday, that his leading inflationary indicators are turning up again, leading, so that he thought it could reemerge, especially if we don't have a recession.
By the way, I listened to his interview yesterday. I listened to it, some of it, in the morning when you did it live, and then I re-listened to it um the yesterday afternoon as I was doing my analysis on ForexAnalytix. But what do you? I mean, he still looks for a potentially hard landing. So
Yeah, just
yeah,
like, the timing of it was delayed because of all the one-offs from COVID and, fiscal stimulus.
yeah,
So,
yeah.
yeah, I think a lot of economists. I don't see Eric's stuff around anymore. He's still in the business.
EPB research.
Yeah.
Yeah. Actually, I just watched one of his videos. He's the same thing. World's gonna fall apart. It's just delayed. So
Mhm.
but I mean, his stuff is still very uh, convincing. I guess
Yeah.
you could say. He makes good points. Whether that happens or not, we'll see.
Yeah.
Going to the back to the dollar, Forex trader said all the dollar pairs show that they're going to break down. Look, I beg to differ. I actually think that the cable's struggling at resistance. I think the Aussie looks like shit. I mean, it's in a
Yeah.
triangle right now, but it is not falling through with this rally that we're seeing in risk. We're in breakout territory in the S&P, and the Aussie cannot get over 68.50. I mean, what the hell? Dollar Canadian, it is nudged right up against 134. I mean, it is not backing away. Now, one of the things that we should be watching today, and Ryan, I'd love to hear your input here because you've been relatively quiet, is look at crude oil. Crude oil is right up against resistance, and you want to see inflation spark up here. Let crude oil push up back up towards 80. And I know a lot of you are going to push back and say, well, it's an election year, so there's no way that gas prices are going to go higher and energy costs are going to go higher. We'll see what crude oil has to say about that, right? So, crude oil is right up against resistance. So anyway, Ryan, what are your thoughts here?
What specifically? Are you drawing technical levels on an inflation chart or oil?
Yeah. Let's say what do you? I know it's silly.
I was close.
It's silly.
If you started drawing a head and shoulders on that, I'm hanging up.
Of course, I wouldn't do that, but I just wanted to point out that inflation. This is going to be the tough haul for the Fed. And I know we've talked a lot about central banks and them getting to the finish line here, right? Getting inflation down to their mandate is going to be the difficult point. And this is why I think you're starting to see, inflation stall around that, 3% level. So,
well, it's come down for the best part of over a year now. It's been falling. So yeah, nothing goes one way forever.
yep.
And that was the worry, the note of caution I had, even when inflation was going up. When it comes back down, where does it stall at?
Yeah.
But I think for traders generally, now we're sort of getting closer. If you want a rough rule of thumb, use the 3% level as a sort of pivot for how Fed expectations will go. If we stay above 3% for the foreseeable future, then the higher for longer rhetoric is going to remain in play from the Fed. If we start coming under 3%, getting a two handle, heading down towards target, then that's when all the cut traders are going to be, pricing cuts more and more. So your 3% on the headline number is your rough rule, your rough pivot for Fed expectations. In the meanwhile, today we've got CPI forecast to go up while the core comes down. So one might cancel the other depending on how much of a variation it is. We know the core lags.
Yep.
But then you start to get into that central bank accounting smoke and mirrors. You know, if the headline comes down to 2.5% and the market gets all dovish, but the core is still at 3.4, 3.5%, then the Fed's going to go, oh, yeah, well, CPI is doing all right, but that core is still high. And we've got to be higher for longer because of that.
Yeah.
And vice versa, if it goes the other way, if the core's down at 2.5%, but the headline's at 3.5%, they're gonna lean on the headline number. So it's a difficult one today because we're expecting the core to come down, but the headline to come up. If they both go down, fine. You get your dollar sell-off. You get your doves going, yep, here come the rate cuts. But if they both go up, then that obviously the opposite happens, and dollar gains and yields go up and whatnot. But if they're both there or thereabouts, I think it's a bit of a cancelling out effect, and we might not see too much going on in the market outside of a sort of knee-jerk move.
Right. You know, well, I hope we get more than a knee-jerk move today, because the market is consolidating, and we're seeing some good consolidation everywhere, almost across the board. I want to talk a little bit more about the Aussie dollar, because this is something that that I've had a conversation with. Well, we've been talking with the ForexAnalytix community during the F.A.C.E show, or excuse me, the Morning Edge and the Daily Roundup. You know, one of the failures of the Aussie here is, and I think this is what people should be paying attention to. This is the end of the year, right? This is the end of the year rally, and this is the big rejection. And since the market's open, and since everybody's come back after New Year's, we've saw this sell off in the Aussie, all this give back. Now, one of the big risks that you have with the Aussie dollar, and one of the reasons why everybody's been probably structurally long in the Aussie, is because risk has been rallying, right? You have the S&P near all-time highs, you got the NASDAQ 100 at all-time highs, Dow Jones at all-time highs, even the Russell has trying to gain some support over the last couple of months. The Aussie has not been receptive to that. And so now we have a confluence right here. You can see it's this number right here. The devil's number at 66.6, 66 cents, 62 pips. And then the 38% retracement comes in at 66.40. That level breaks. I'm going to, well, first of all, I'm going to be short a lot of Aussie dollars. I'm already short Aussies in, cross rate form. But I'm going to be shorting Aussies quite aggressively against the dollar, just as we get a little elevator ride, probably back to the 200 DMA right through here. But I think we rally
first?
I'm sorry.
How about if we rally first, say to 67.80 or so? Would you be a seller up there?
It
still
depends
looking
on
for this?
It depends on what, like Ryan said, like, let's say the data comes in line today on both counts, and would we get maybe a little bit of a move in the Aussie back to 67.50 or 67.80 before rollover? It's possible. Yeah, I would. I'm gonna be praying on this in either direction.
Okay.
One of the ways that I'm short the Aussie is through the Euro Aussie, and everybody in the ForexAnalytix community knows that I've gotten long on this breakout of this wedge, and I'm adding above the 38% retracement, which is at 164.06. You can see I have a little alarm set up there. I'm already long this, and I'm up 83 pips right now, and I'm going to be adding to that position because there's nothing better for me as a technical trader, as a trader in general, is inching into a position or getting partials, then getting a breakout on confirmation, and then adding to it, and then having a fairly large position on a breakout. So, and then my cost average ends up being somewhere in the middle. And again, if you're part of the ForexAnalytix community, you're seeing me do this inside of the trades room, where that's where we mark up what we're doing here in the markets. You can see open positions and closing positions and everything else. So anyway, that's what I'm doing there. Ryan, we got just a few minutes before CPI, and Ryan and Dale, what are you guys' let's start with you, Ryan. What are your thoughts, just best trades to look at here this morning?
I'm keeping an eye on the S&P.
Okay.
I think the futures have had a little break of that 4,800 level. I think we're brewing for a pop. I think the market wants to see the data, and the market wants to see these early bank earnings tomorrow.
Yeah.
So I'm looking at any sort of decent dip, maybe just to run into some longs. But I won't go that big until we get over that earnings hump. And yeah, then I think if we clear that, 4,800 is going to be in the rearview mirror pretty quickly.
Yeah, I mean, look, the breakout is brewing, right? I mean, it's an insatiable bid that we're seeing in S&Ps and in markets in general. So, you know, I think we got to be respectful of that. How about currencies? What's on your radar here?
Currencies, I'm just going to be. I'm still long euro dollar, so that's one I'm going to be monitoring. If we get a decent pop through and it does keep on going, then I'll be looking for a push up to 111, maybe beating that up to 112 and continuing this trend we've seen since late last year.
All right. Well, I'm going to stand in your way. You're going to be finding some of my offers on the way. All right. Thanks, Ryan. How about you, Dale?
I'll steam through them.
You're going to just slice through my offers like warm butter, I'm sure. All right. Dale, what are your thoughts?
Buying the dollar at 101.5, selling Aussie at 67.80, and euro 10.5 or so. So looking to take advantage and buy the dollar on dollar weakness.
Okay. Yeah, you and I will be in the same boat. Looks like, Ryan, you're going to have to slice through Dale and my offers. So there you go.
That might be a bit tough. Might be a bit tough.
It's going to be,
yeah,
his are going to be like leather.
Can you slice through my micro lots, Ryan?
So real quick, I think we should probably take a look at yields, you know, because yields are up. Well, actually, let's do it this way. Here's the 10-year. So here's the 10-year notes, and remember we have a 30-year bond auction today too, which we should be paying attention to. That comes in around, I think it's 1 p.m. Eastern, if I'm not mistaken. I think there's like 30 billion. 27. So I forgot. I have to go back and look. But anyway,
don't also forget it's a holiday. Stocks are closed on Monday, Martin Luther King Day, and everything else shuts early. So whatever happens today, you know, you may see a bit of profit taking closing off before the weekend in stocks.
Wait, is it Martin Luther King holiday on Monday?
Yep.
Dang, it is. Holy cow.
You don't know what's going on in your country, even if you don't.
I know. Well, just in my defense, the state of Arizona, which was one of the last states to actually start recognizing, you know, Martin Luther King holiday, like everybody else would have it off, and we didn't, you know, for like a number of years. But my kids, like all of a sudden, they're like, "Hey, I've got today off," and I'm like, "What? What do you?" I had no idea. But anyway, yes, it's going to be a 3-day holiday. So thank you. Thanks for bringing that up, Ryan. Appreciate it. All right, let's get set up for the data. Matter of fact, let me pull up our charts here. I'm going to grab the dollar index and put that over here on the left. So you got the dollar index here on the left. You got the S&P in the middle. You got 10-year yields over here. Matter of fact, I think I'm going to switch the S&P, or excuse me, the dollar back over to the euro and see what the euro response is immediately. And then if you go over to ForexAnalytix, let's grab the data flash, which happens to be up over here on my other side of the screen, or another screen. Let me just bring that over. And let's see, how much time do we have? We have about 45 seconds. So, and I guess we should probably note that we have jobless claims, continuing claims. Those are the ones that sneak up on you during CPI days where you go, oh, CPI came out, but the market's really moving on the continuing claims numbers that have, you know, gotten away from expectations. So keep those on your radar. So there's all the data. Should be coming out very shortly. Heads up, folks. Here we go. Gold got a little pre-market squeeze, by the way. AJ just pointed out it. We got a little bit of a positioning squeeze there. I think you can see positions moving all over the place. Actually, now I'm looking around. All right, here we go.
Hot in both. Hot in
Wow,
both.
look at
Higher
that hot
CPI,
data. Look at the euro
higher
just
than expected core.
poop in the bed. Well,
Higher for longer.
higher for longer it is, folks. And the dollar is being somewhat responsive. Yeah, so we're gonna see the euros trading around 109.70. It's just, the real breakdowns in the Aussie, because that thing's trading like I said, it's trading like shit. So it broke down out of its triangle now. So yeah. Look, hey, Ryan, technical analysis on inflation works. Wait till I put out a Gartley pattern.
Put out a blog on that or chart of the day. Chart of the
Yeah,
day.
you won't find me retweeting that one.
Yeah, I'm sure. All right. So
all right. Well,
anyway,
if this continues, Blake, I'd love to see the Aussie trade near 65 in the weeks ahead.
yeah, one of the things that one of the things we should be paying attention to, and I just had this alarm go off on the dollar mex, is the dollar mex is probing a descending trend line. And if you want to remove the dollar out of this equation, the euro mex might not be a bad place to be looking. K-Man will be back tomorrow, so we'll get his opinion here. But yeah, if we start breaking above like 1720 in the dollar mex, I would look for a bit of a squeeze here in the dollar mex. So a little bit of a heads up. Aussie's getting wrecked. Kiwi's getting wrecked. Dollar yen
Gold gave up its bid. Gold failed pretty good from what was that high? 2050, which is what I said earlier. We got to 46. So anyway,
and if you this is what I'm really looking for over the course of the next. This will be on my week ahead video, just so you guys know. I'm giving you guys
nice call on the dollar, Blake.
Thank you. I'm going to look for a short in the dollar yen right here at 147.50. Again, I'm giving you guys an early glimpse of what I'm going to be talking about on the week ahead video on Saturday. So I am going to be establishing some dollar yen shorts, and I'm going to be joining Ryan's parade up there is where I plan on being in it. So yeah, dollar is responsive, and hopefully you guys are doing well with some of those dollar longs, and stocks are getting the notice higher for longer might be the case here. So
and the 10-year held right where it had to at 4. Under 4, look out, but looks like 420 should be coming. I think we diagnosed this whole thing pretty good, don't you, Ryan?
Yeah, pretty much.
Yeah.
I think 420 might be a bit of a push though, because well, we have to wait and see. It's not. You think it might have taken off a bit more than it has. Last year this thing would have been up 15 bips already, and it's not. So don't know quite what's going on in bonds at the moment.
Yeah, it's going to be interesting to watch. I want to see if we get any follow through in equities. Equities have been so bullish. These dips are being bought, so it's not this like seeing the S&P come off, whatever it is. Like what did we come off? 10 handles. I mean,
we were off more, but it's come back yet.
I mean, yeah. I mean, we were off like 20 handles. I mean, barely even moving. But you can
look at dollar yen trading down to the 70s now, 78, 79s.
Yeah, so maybe this was a fade, huh?
Yeah, I mean, I'm not getting super excited about anything. I've got some euro dollar shorts from pre data, and I'm just kind of sitting in. I'm going,
Yeah, everything's coming. Everything's fading. Euro's coming back.
It's because everybody's buying Bitcoin. I mean, by the way, that was a big nothing burger. But if you guys haven't seen it, and I just need to mention this really quick. The 618 retracement comes in just at 49,000 basically. And you can see that we got some horizontal resistance up there from back in March of 2022. So big resistance in Bitcoin. So if you're out there buying Bitcoin because you're like, oh, ETF is approved, and and look, we didn't get any sell the news, which we didn't. Just be careful of this 49,000 level. I think it's going to be a big one on the way up, in my opinion. So, and by the way, crude could not break out. It did not do anything. And gold,
it's all over the place.
Yeah, it is. It's like all over the map, actually. Look at that big outside, big outside hourly candle. But gold's still above that trend line. So,
Yeah.
you know, while we're above, I think while we're above this 2013 level, I'm not going to get, you know, aggressively long the dollar. If we start breaking through that, then, you know, I start, you know, really pressing some dollar longs, I think. So that's it. Pretty much it. So, oh, hey, I did want to mention this, guys, that tomorrow we'll have Nick Groves, Grasshopper, one of our new team members of ForexAnalytix. He'll be joining us tomorrow. Just partway through, I know Dale's got Pedro da Costa from is Pedro's from Reuters? Is it Reuters?
No.
Oh, he's from
MNI, I believe it is.
yeah, MNI, Market News International, MNI, MNI. He'll be joining tomorrow, and
He was with
but
the Journal, Wall
was
Street
with the Wall
Journal
Street Journal.
before that.
Yes,
Yeah.
he's like one of my favorite Fed guys, like interviewers
yeah.
during the FOMC. Anyway, he'll be joining Dale tomorrow, but we also have Nick here tomorrow. So he's been out for like the last month. He's had some stuff he had to deal with. So it'll be nice to have him back in the saddle. Ryan, great analysis today. Glad to have you here. And I know we're going to have K-Man back tomorrow. And that's pretty much it. So yeah, I'm just kind of watching the market. We're going to have the CPI that just gave us some whippy price action, and we're just back to where we started. And
It looks like the dollar's going to fail from here now.
I don't know. I wouldn't be a seller here. I'd just be waiting for this breakout one way or the other.
Okay.
You know,
All
I think that's what you got to be looking at. It's kind of the range we've been in, which sucks. It's 101.80 to 103, and those are the ranges. I mean,
yeah,
it's you got to get out of the ranges, and you know,
yeah.
But stocks are still holding up, and I think that's what's going to be the market still paying attention to, is just the dips are being bought in risk. And until that changes, it's going to be hard to see the markets, any other markets, do anything else, because they're all connected at this point.
Yeah, all one.
Ryan,
market.
you have any other final comments before we go?
No, just like what a lot of people are saying in our room, James in our room, you know, the market looks like it just wants to sell dollars whenever it gets an opportunity.
Yeah.
And, the market's not ready to get rid of, to drop the cut bone just yet.
Yep. Yeah, it looks like it. And I'm going to keep my eye on gold here. Gold still looks like crap. Yeah, so we'll see. We'll see. I'm just maintaining what I got.
Anyway, two-sided. Despite it being a hot number, it was not one way. So they faded the number so far.
Yeah. I think, you know, I'm going to be paying, since I have some euro exposure, I'm going to pay really particular attention to this intraday right there. And that means today's lows are very important. If we start taking out the printed low, which is about 30 pips below where we're at, that'll probably get me a little bit more excited about things.
And the yen may have just cleaned out the stops over 46, like Ryan was saying, and it could have a down day.
I don't know. Ryan, I still want to sell it a little higher.
Well, I was hovering on that 146 plate. I didn't do it, and now I'm watching it go south again. But it looks similar to what we got Friday, didn't it? You know, we get a move and then it just doesn't last. But give it a few.
Yeah, but yesterday on Friday we had data that confirmed that. So today maybe it's the 30-year auction, right? Maybe the 30-year auction falls flat on its face, because you got the 3-year, all the notes auctions this week have gone pretty well, and yields have risen. You've had strong strong bids. How about if people don't want 30 dated year paper, right?
It'll be a surprise given what bond auctions are doing globally. There seems to be a lot of early year appetite for notes, so it'll be a big surprise if the 30-year doesn't perform like the other two have.
But if
The
it
one thing
doesn't,
I would
maybe
say,
maybe that's the data that pushes the dollar yen back down. You know, I don't
yeah,
know.
And
one
keep in
thing I want to
mind
say about
we have the
sorry, go
Taiwanese election this weekend, and
Yeah.
for the 1 millionth time, we face a government shutdown next Friday. But like always, so
They'll put piece
Yeah.
together. It'd be a partial shutdown.
okay.
I think it's a two-part deal, if I'm not mistaken. And yeah, I would say that I would say that they're gonna get together. They're gonna put together one deal. And that Speaker Johnson, is that his name?
Yeah.
If he puts something together, he's at risk of losing his job. It'll be a short stint of speakership.
Yeah.
They just keep them in there like they just rotate through them just to get things passed, and then then use them as speed bumps, I guess.
Yeah,
So
he doesn't last as long as $5,000 spec accounts.
yeah. Oh, Dale, you're so funny in the mornings. I love you. All right, man. Hey,
Anyway.
yeah, the dollar's firming back up again, and gold's looking a little weaker, but we'll see. I want to see the euro take out these lows, and if the euro takes out these lows, you'll see the Kiwi take out this trend line here. You're going to see a lot of things start to play out. So, anyway, heads up. Hopefully we get some follow through, but tomorrow will be we have PPI tomorrow. Don't forget that. And Dale, I think that's it for us today.
Okay.
All right.
Marcus Tommen, glad you're with us. We like to add value. Our mission statement is to build up and edify traders every day. So remember, everyone, don't just count your pips, count your blessings. Could join the team if you're a subscriber, and a little over a half hour for the morning edge. So you need to get the morning edge so you don't fall off the ledge. And we'll be talking to you on TGIF tomorrow, okay?
Dale, you made me snort. It's
All
funny
right.
when you make me snort.
Get some Flonase. Anyway, good hunting the rest of the day, everyone. Thank you, Ryan and Blake, the Three Musketeers. We did our best for you today.
Cheers, guys.
See everyone
Thanks.
tomorrow.